Trade plays a crucial role in Malaysia's economy, contributing significantly to its growth. Today, I will present an analysis of Malaysia's trade performance over the past decade. So, let's begin by looking at the overall trade trends from 2015 to 2024. Over the decade, export grew significantly, starting at Rm 777.4 billion in 2015 and peaking at Rm 1,550 billion in 2022. However, by 2024, there was a slight drop to Rm 1,242.9 billion. Similarly, import increased from Rm 635.8 billion in 2018 to Rm 1,293.8 billion in 2022, before decreasing to Rm 1,140.1 billion in 2024. The balance of trade has been consistently positive, with Malaysia recording its highest trade surplus in 2022 at Rm 256.2 billion, but it turns out dropping to Rm 102.8 billion in 2024. This decline can be attributed to several factors, including decrease in export due to the weaker global demand, supply chain disruption, and slower global growth. So, it's important to note that fluctuation in global demand, exchange rate, and the impact of COVID-19 pandemic in 2020 played a significant role in shaping this trend. Next, let's analyze and compare the patterns of domestic export and re-export from 2014 to 2024. First, domestic export, which are goods produced locally, grew steadily from Rm 665.9 billion in 2014 to Rm 998.9 billion in 2024. However, there were minor fluctuations, especially during January in 2020. On the other hand, re-exports saw faster growth, rising from Rm 99.5 billion in 2014 to Rm 244 billion in 2024. The significant jump from 2018 to 2020 highlights Malaysia's role as a key trading hub in the region. Now, let's analyze imports by end use from 2016 to 2024. Intermediate goods consistently contributed the largest share, rising from Rm 399 billion in 2016 to Rm 624.5 billion in 2024. These goods support Malaysia's manufacturing structure. Capital goods, such as machinery, grew from Rm 100.2 billion in 2016 to Rm 136.3 billion in 2024, reflecting ongoing industrialization. Consumption goods also increased from Rm 67 billion in 2016 to Rm 97.1 billion in 2024, driven by rising customer demand. Over time, there has been a shift toward importing more advanced intermediate goods, aligning with Malaysia's move toward higher value manufacturing. Let's now examine the Malaysia's major export by sector in 2024 from January to October and their contribution to GDP. Electrical and electronic products were the largest contributors, generating Rm 491.2 billion. Petroleum products were the second largest at Rm 108.7 billion. Other contributors included palm oil, chemicals, machinery, and many more, showcasing a diverse export base. This accounted for significant portions of Malaysia's GDP, showcasing its strength in global supply chains. Moreover, this sector collectively reflects Malaysia's diverse economy, where manufacturing and natural resources play a critical role in GDP growth. Now, turning to import, the largest import sector was electrical and electronic products at Rm 373.7 million. Malaysia imported electrical and electronic products to support Malaysia's electronic manufacturing industry, while petroleum products were the second largest at RM 109.8 billion for import. This is due to the domestic consumption and energy need, followed by import from sectors like machinery, chemicals, and monomer that valued between RM 26.3 billion to RM 94.3 billion. This import shaped Malaysia's economy by driving production, supporting industry, and meeting energy needs, and also consumer demands. Let's move on to Malaysia's primary export destination in 2024. Singapore, the United States, and China were the top markets, contributing RM 190.3 billion, RM 139.4 billion, and RM 153.2 billion respectively. This relationship significantly influenced trade policy as Malaysia relies on this market for sustained export growth. On the import side, China was Malaysia's largest sources, contributing RM 243 billion, followed by Singapore RM 138.1 billion, and the United States RM 104.9 billion. This import impact local industries by supplying essential raw materials and advanced components. However, the reliance on China highlights the need for diversification to reduce potential risks from economic dependencies. Now, let's look at Malaysia's trade with ASEAN countries under free trade agreements. Exports to ASEAN grew from RM 219.2 billion in 2015 to RM 452.7 billion in 2022, but then it dropped to RM 365.4 billion in 2024 due to the lower demand. Import follows a similar trend, rising from RM 182.1 million in 2015 to 318.1 billion in 2022, then falling to 2072.6 billion in 2024 due to the supply chain disruption and lower demand. These agreements have facilitated smoother trade by reducing tariff and improving market access. Overall, ASEAN remains a vital market for Malaysia, both as a buyer of export and a source of imports. Last but not least, let's look at export by state in 2023. Pulau Pinang was the largest contributor with RM 447.4 billion, followed by Johor RM 290 billion, and Selangor 252.7 billion. However, states like Perlis and Kelantan had minimal contribution, which contributed less than RM 5 billion. This is reflecting regional disparities. These low figures reflect regional challenges such as limited industrial development, lower infrastructure investment, and reliance on agriculture. Finally, based on the analysis, I recommend the following strategies to improve Malaysia's trade balance and enhance economic growth. First, diversification of export sectors. To reduce Malaysia's reliance on electronic and petroleum export, it is crucial to explore emerging sectors such as green technologies, biotech, and renewable energy. Investing in this industry would allow Malaysia to tap into the growing global market that prioritizes sustainability and innovation. Second, local production and sourcing. Malaysia should focus on increasing local production to reduce dependency on imports, particularly in intermediate goods and machinery. Third, strengthen regional and global trade agreements. Malaysia should seek to expand its trade agreement beyond ASEAN to include regions like Africa and South America. This will help reduce risk from overdependence on existing trade partners and open up new markets. And lastly, technological innovation. Malaysia should invest in Industry 4.0 and digital transformation to improve productivity and global competitiveness.